Welcome to Alpha Insights. I'm Kristen. Today we're diving into Monster Beverage, its growth story, the valuation debate, and what investors might want to watch next. Joining me is Ryan, an investment advisor who helps make sense of the numbers. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Kristen. Great to be here. Monster is one of those names that always sparks lively conversation. Big margins, lots of cash flow, and a valuation that gets people debating risk versus reward.
Okay, let's start with the basics. Give us the quick snapshot. What makes Monster tick right now?
Sure. At a high level, Monster is a category leader in energy drinks. It has strong brand recognition with younger consumers, deep retail distribution, and good pricing power. The business generates solid free cash flow and carries a very conservative balance sheet. Plenty of cash and almost no debt, which is unusual and comforting for a consumer beverage name.
So, the real question here is, if the fundamentals are good, why are people split on the stock?
Right. The split comes down to valuation and expectations. The market is pricing in ongoing above-market growth and continued margin durability. That means if growth slows or margins slip, the multiple can compress quickly. Also, there's been some insider selling. Small in the grand scheme, but it contributes to near-term sentiment risk.
Walk me through the key numbers that listeners should care about.
Okay, trailing revenue runs a bit over $8.2 billion, and reported margins are strong. Net margin, roughly 23%. Earnings per share on a trailing basis are about $1.94, and levered free cash flow is north of $1.5 billion. The company also holds around $2.77 billion in cash and has almost no leverage, so liquidity isn't a concern.
Interesting. It sounds like a high-quality operator. But what's the valuation picture look like now?
The price-to-earnings ratio is elevated. Think in the mid to high 30s on a trailing basis and the low 30s forward, which is higher than the broader beverages peer group where the number is closer to the mid-20s. EV to EBITDA is also above its historical range. In short, the stock carries a premium that reflects optimistic future growth.
So the market is paying up for growth. I mean, when you look at the data, how does that premium translate into upside or downside scenarios?
Good question. Analyst consensus price targets cluster around the high 80s, which implies some upside from current levels, about 20% or so. On the bull case, if volume and margins both continue to improve, the stock could re-rate toward the mid to high 90s. On the other hand, if growth cools or competition heats up, you could see multiple compression that pushes the stock notably lower. Some models put a downside scenario into the low 60s.
Right. And there's an earnings catalyst coming up, correct?
Yes, Monster reports again after the market in early May. And that quarter will be an important check on revenue momentum, price realization, and input cost trends. Guidance and management commentary on international expansion or product innovation will be especially watched.
Analysts seem mixed. What's the breakdown there?
The analyst community is split between buys and holds, with no outright sell ratings in recent tallies. Some firms have trimmed targets slightly, reflecting more conservative upside, while others still see above-market growth. So sentiment is constructive, but cautious.
Honestly, I was a bit surprised by the insider selling note you mentioned earlier. How material is that?
Insiders sold about $3.9 million of stock over the past year. That's not massive relative to the company's market cap, but it does get attention because insiders are often a signal people watch. It's more of a sentiment flag than a fundamental weakness in this case. Another thing to watch is competitive pressure. Red Bull, Keurig Dr. Pepper, and smaller challengers like Celsius are all active. Monster's moat is strong today, but execution matters. Marketing, new product launches, and retailer relationships can shift share subtly over time.
So if someone asked, what should I be monitoring after this episode? What would you tell them?
Monitor three things: revenue growth, and whether price versus volume is the driver, margin trends, and any cost pressures, And of course, the commentary on international mix and new product traction. Also keep an eye on valuation versus growth. That margin of safety question matters a lot here. And, remember that this is informational. It's not personalized advice.
Yeah, that's a good point.
One last practical note on near-term trading. The stock has pulled back from its highs earlier this year, but sits well above its low from the last 12 months. Technical support and resistance levels could be useful for traders who want defined risk, while longer-term holders should watch the growth versus valuation balance.
Great. Let's wrap with 3 quick takeaways for listeners.
Sure. 1. Monster has durable category advantages, strong margins, and a conservative balance sheet. 2. The stock trades at a premium, so much of future growth is already priced in, and that raises valuation risk. 3. The upcoming early May quarter is a key catalyst. Watch revenue mix, margins, and management guidance.
Perfect. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights and notes on companies like Monster Beverage, head over to stockalpha.ai. Thanks for listening to Alpha Insights. Ryan, thanks for joining.
Thanks, Kristen. Always a pleasure.